I totally get it for first-time buyers. Right now, it is bloody hard. This graph shows homeowners. For people under 65, owning with a mortgage has decreased from a high of 58% to about 40%, whilst the boomers and those over 65 have enjoyed an ever-increasing rate of outright ownership with no mortgage, jumping from a similar 57% up to 74% over the exact same period. Does it feel like you'll never be able to own your own home? And should you wait until next year or see what happens over the next few months? Interest rates have already shot up from lows of 2.1% to upwards of 6% and above. There's a lot of talk about the property market right now. Let's explore the facts and figures for first-time buyers and how easy it's going to be over the next few months. This graph shows first-time mortgage payments as a percentage of take-home pay. In the red is the end of 2022. On average, for the UK, first-time buyers are spending 40% of their take-home pay on their mortgage. Comparing that in grey with the long-run average, that was almost 10% less. When I look back at the year 2000, that was even less at 23% of take-home pay spent on mortgages. And with that mess, we need to explore what's happened so far that's put us in this really bad position and what could happen in the future. So first, let's look at the recent problems. Now, the first major thing to talk about is the pandemic. One of the many once-in-a-lifetime events that have happened in the past 2 years. The pandemic effectively shut down the entire property market. Everybody started rubbing their hands together, thinking that that was going to be the start of the next property crash. But unfortunately for a lot of people, the exact opposite happened. It created all of this pent-up demand where people couldn't move, people couldn't view houses. And the moment the property market was opened up again, you had this huge surge of demand but not enough supply on the market. And it triggered a huge race for space in the UK, pushing up property prices massively. And at a point where demand wasn't a problem, the government still stepped in and introduced a massive stamp duty holiday, one of the biggest we have ever seen in this country, which only put more fuel onto the fire. It was like lighting a bonfire to burn a candle. So imagine all of that combined with lockdowns where people weren't spending money on petrol, on brunches, on going out, socialising, going to the cinema. We had all this extra spare cash in our bank accounts. So much so that when you look at one of the largest banks in the country, Lloyds Banking Group, that have Lloyds, Halifax and the Bank of Scotland, they typically serve around 1 in 4 to 1 in 5 people in the country. In 2020, in their end-of-year annual report, they had reported that customer deposits were up 10% year on year. A deposit is basically the money that's sat in your current account to this day. That equated to an extra £40 billion extra sat in bank accounts between 2019 and 2020. Imagine multiplying that across all the banks in the country. Everyone was sat on a lot more cash than usual. Looking at house asking prices over the past few years on Rightmove, you can see a gradual but stable property market. And from the moment the data was stopped because the whole property market went to a complete stop, the moment that was open again, there was a massive surge. Great if you have a house, not great if you're a first-time buyer trying to get onto the property ladder. Next is interest rates and house prices. Looking at the Zoopla blog, year on year, property prices, especially in the north of the country, were surpassing more than 10% growth every 12 months. This meant that house prices were absolutely skyrocketing, making them even more affordable and even more of a challenge for first-time buyers to get onto the ladder. So just after lots of first-time buyers have spent a very long time saving for their first deposit and preparing themselves for the interest rates, everything shot up even further and just became even more and more out of reach. On a £250,000 house, that's an extra £25,000 you need to pay every 12 months. Then with the interest rates tripling from 2% to 6% quite literally overnight when Liz Truss crippled the economy, it meant that houses were a fifth more expensive and interest rates were 3 times the norm that we've been used to over the past few years. And actually, not just for first-time buyers, but anyone trying to buy a house or move, it has become really, really difficult. And naturally, we always see a lag in the market. At the moment, we're seeing this exact phenomenon happen where sellers quite haven't accepted that property prices are starting to go down. They're still trying to hold on to the idea that they're going to get something above their asking price based on the market 6, 7, 8 months ago. But the ultimate problem and the reality is that that nice leafy green house or that beautiful new build that you've just seen is now totally and completely unaffordable. And the consequence of that is that you either have to find more money to put into the house in the first place to lower your loan to value, thus lowering your monthly repayments, be a cash buyer, which not a lot of people are, or lower your expectations on the size, type, and location of the property that you wanted for the past few years. And let's be honest, who really wants to downgrade? Next is the Help to Buy scheme. Now, the government have recently scrapped what was one of the most popular Help to Buy incentives using the equity loan. So much so, in the last quarter of 2018, it was used for almost 60% of new build purchases in the UK. But the scheme came to a close in October 2022, and the final applications will be done by March 2023. That means no more large equity loan to help with your very first house purchase, meaning you are pretty much on your own from now onwards in terms of what the government can provide and support you with. But that being said, not everyone will mourn the passing of the Help to Buy scheme. A lot of people have criticised it, that it has inflated property prices and made it even harder for first-time buyers, leveraging the high demand we have in this country with an incentive that doesn't really help first-time buyers. Morgan Stanley did a report on this and found that on average, new build homes that offer the Help to Buy equity scheme were 5% more than average. And the secondary drawback is the new home premium. When you buy a new house, typically it's a little bit more expensive than similar homes in the same area. And they are on average 16% more than the market in that particular geographical location. In real terms, that means for a new build first starter home using a Help to Buy equity loan, you are about 21% worse off from the value of the home that you bought. This causes many people to be trapped in negative equity, meaning they are trapped in those homes for many, many years to come. So we've explored the downwards pressures, making things harder this year for first-time buyers. But what about the upwards pressures, the things that might make this year a little bit more exciting? Firstly, the upward momentum is 100% losing steam. Although we've seen growth of above 10% in certain northern areas of the UK, all of that growth is now coming to a complete stop, and we're starting to see the dip downwards as we enter into 2023. The Halifax House Price Index published in December is showing that month on month it's going down around 1.5%, and in the Q4 of last year was 2.5% down. So we're not quite seeing a huge crash just yet, but we are trending in a downwards pattern. What does this mean for first-time buyers? Well, as prices go down, it means that when you're negotiating with the seller, they're going to be more likely to add a bigger discount to their asking price of the property, giving you a somewhat slightly better deal. Secondly is the impact of the race for space. Since the pandemic, a lot of people wanted to get bigger homes, more fresh air, which meant that city centre locations have been a little bit less in terms of demand, making them easier to pick up a good deal. So if you're looking for a city with good jobs, good social life and things to do, then looking at city centre apartments or houses near and very close to a city might not be a bad idea. There is a chronic problem that we really need to talk about in this video, which is it doesn't matter how far property prices go down this year. We could have an almighty crash. Interest rates could go back down to 1%, which isn't going to happen. But it still fundamentally would not help first-time buyers whatsoever. Even if the government introduced a brand new Help to Buy scheme, it still wouldn't help. It's not tackling the root cause and problem. Property prices are and have been very expensive for a very long time. So even holding out now for a small dip in the property market is like waiting just to get the icing on a cake and you're missing everything else in the middle. There has always been a fundamental problem in the UK with a planning system that's completely backwards, but also the developers themselves that are buying these small parcels of land and building box after box after box in bland, soulless estates of new build houses. And I've done more than enough videos on this channel about the poor quality and workmanship of new build homes, and in some cases downright dangerous. And they build all of these new build homes in these huge estates that are completely soulless, but then don't spend any money on infrastructure, on local doctors, local schools, and the things that help the local community to grow, meaning schools are more competitive, GPs are harder to get hold of, and the roads are more congested. The government are simply not acknowledging the root cause of the problem. They're purely focusing on the demand, but there's more than enough demand in the country. Demand is not the problem, and therefore schemes like Help to Buy are just merely pushing prices up further and further. The problem is the supply, but then even at that, the supply that we do have is really, really bad quality. So you're damned if you do, and you're damned if you don't. And until that fundamental problem has been tackled, First-time buyers are always going to find it hard, and it's only going to get harder. It's going to get worse before we see any signs of it getting better. Affordability is going to be key in this new market going forwards. This is going to be influenced by mortgage rates and then also the high property prices. Even if they come down, they're still coming down from an absolute high. And when you zoom out and look at the wider picture, property prices are still extremely expensive in relation to household income. But the more unaffordable a local market is at the moment means there's more room for opportunity this year for it to fall gracefully by a few percentage points. On the other hand, flats are also becoming more affordable. Now, don't shoot the messenger here. Not everybody wants to live in a flat or apartment. I completely get that. However, when you look at house prices, they're running away faster than the price of flats. Therefore, flats are more affordable, they're more economical, and they're easier to heat in the winter. This graph shows the price gap widening between houses and flats. Now, naturally, there will always be a gap, but the fact that that gap is getting wider and wider as the years go by is showing that houses are disproportionately more expensive to flats and apartments. So, can you buy a house as a first-time buyer in the UK right now? Yes, but also no. It's very, very hard, and I get it. If you are fortunate enough to have a deposit saved up and you're in a good position where you can consider looking at houses, then you're probably better off than a lot of people right now. But it is hard, and if you're struggling, that's perfectly okay. I read lots of the comments on the channel and have seen so many people comment about all of their plans being completely scuppered due to the property price increases and the extortionate interest rates right now. It is really difficult. The problem is, with property prices so high and only just starting to come down, and the interest rates aren't really at the level they should be yet, it makes it doubly hard. It means that you need a bigger deposit to get the house in the first place, and then when you do get it, you have to eat more into your monthly cash flow just to afford it, on top of the bills and all of the other parts of the cost of living crisis. If you can keep a really close eye on Rightmove, use the Chrome plugins to look at property history to see if a property is coming down in price again and again and being reduced, then that's a good way to at least start finding some kind of good deal out there at the moment to make sure you're not paying too much and putting yourself at risk of negative equity as property prices are likely to fall further. Just keep going, keep saving, keep building up your deposit, and when the time is right, you'll have the cash and the income and the right interest rates to find the right property for you. And I guarantee that when you get through the door, it'll all be worth it in the end. If you enjoyed this video, then check out this one here, which is whether you should buy a house now or wait until next year.